what a turnaround on the markets.
No,
and we needed the positive PMI numbers, not only on the local front coming in at 52.9, much higher than consensus of 50.7, but we had a positive surprise in China. And of course, China is changing the world order, and we're all looking to China to make up for any lost growth in the US and in Europe. But on top of that, as I said earlier, we had the private sector in the US adding 93,000 jobs over the month of November. So good news all around.
Good news all around at this stage, and we need to say the manufacturing PMI here rose to 52 above expectations with a strong currency. Okay, and it's supposed to be manufacturing that's really hit hard by weak currency. And I'm not saying it's not, but same
but
thing.
But the evidence comes to the contrary.
China also, same thing. PMI strengthens and its currency has also been strengthening. And I think one needs to reflect that a strong currency is not necessarily just a bad thing. There are quite a few positives that come with a strong currency, and I think we need to look at that and leverage off it, because I think we can actually generate quite a bit of investment off a strong currency platform, but we need to just to look at a strategy.
Well, obviously, just coming back to the US and the 93,000 jobs that have been added in the private sector, this is a good precursor to the non-farm payroll number on Friday, which of course we're all going to focus on now for direction in the absence of any other data flow.
No, absolutely. But I think we need to say that's the private sector. What happened in the government sector? We just know that the municipalities and states are still struggling, and that there are recession or offsets there. The Challenger figure was not that great because that showed a rise in layoffs, but I think it's again mainly the state and non-NGO levels that they were reflecting the losses, and it suggests that where you're seeing a pickup, it's not being reflected in a broad space. So let's see what happens on Friday. Obviously, we'd like to see more than 93,000 jobs being reflected. Let's see what happens with the government sector.
One thing we've got to come back to is this theme of volatility, and we're being buffered by news flow on the international front.
Yeah.
One day up or one day down, and we're moving in line with global markets.
Exactly. This is why one always needs to distinguish between volatility and market performance. We could see, if just an example is the Nikkei and the S&P, you could certainly work out some correlation between that through the 90s, but the Nikkei was in a bear market and the S&P was in a bull market, and you often find that with markets is that the US is up, the whole world will be up, but not everybody up equally, right? And again, one still needs to, out of this volatility, spot the investment opportunities where you still have outperformance. And I think emerging markets are still reflecting outperformance. In fact, the JSE is still reflecting outperformance.
Even at these levels, even with that 31,000, 32,000 point level looming.
Especially when you convert it back to dollars. Our dollar outperformance relative to the S&P, for instance, has in fact still been quite strong, even in recent days. And it still suggests that investors are looking for growth in yield, and that's going to be your primary investment mechanism. So countries that are growing well, sectors that are growing well, and also assets.
All right, now let's just focus on these sectors that are growing well, because it's one thing to talk about them in broad terms.
Yes.
But sectors there where you would be putting money in the local sphere now.
Well, the financial sector is a sector I wouldn't be. All right.
So stay away from financials?
Because you've got the political sector looking for vengeance on the financial sector. So there's more regulations and et cetera. So that sector might be strangled. But we're looking at IT, for instance. IT, telecommunications, still strong growth. Pharmaceuticals, very strong growth in that area. Infrastructure, again.
And IT, do you do stock picking within that environment?
Absolutely. So basically you've got the tide is on your side as far as the sector is concerned. So within that sector, you'd say, okay, if you're picking that sector, this is the top-down kind of view. What then is what is the correct stocks to actually pick out of that sector?
Are there any stocks that do stand out for you?
Well, I still think one needs to look at companies that have a core, a solid core of sustainable earnings that can at least pay a dividend from an annuity point of view, but has still got some growth left. So that's the debate about something like MTN, right? Is it a growth or is it a utility?
Is it a growth story?
And funny enough, if it's a combination of the two, I actually like that investment case because you've got this
Lots of money back to shareholders at the end of the day.
the dividends will be there, etc. That's why IT globally is making a comeback. It's not because of a teenager standing in front of a garage with an idea. It's actually solid companies with good earnings but also growth that's coming through because the technology side still has growth to it. You know, the whole story of the, you know, into the tech bubble, which is why that sector people said, no, you hands off. But since the bubble elements have disappeared, strong companies with strong earnings and paying dividends, but has also got the growth, are starting to come through quite strongly.